So hello, everyone, and welcome to Kingscrowd's inaugural investment crowdfunding week. Something that was really important to us as we put together the content for this week was identifying some of the best providers from across our industry that support founders like you on the capital raising side of things so that we could provide awesome founder hours like this. And it goes without saying that our sponsor, StartEngine, is certainly one of the key role players in our industry. As a founder, I could definitely say that StartEngine has been a powerful engine for helping drive success for founders, including myself throughout the years. Harrison Bert, who will be up here in a second on stage, is the director of fundraising at StartEngine, and he's someone that I think, through all of my years of getting to know him, has a really strong purview into what it takes to succeed as anyone in the industry. So this is going to be an awesome session for those founders who are joining us today. Today, we want to dive in on something we call the hybrid approach to capital raising, which I'll let Harrison define for you all. But most importantly, we want this to be conversational. So please drop your questions into the Q&A along the way, and we will look to get to as many of those questions as possible. So Harrison, thanks again for joining us and for being a sponsor of this week's events. We'd love to get you on up here to start this conversation, and I think it'll be really, really interesting. So thank you again, everyone, for joining us here. And please, please, please do drop your questions into the Q&A because we want to make sure we get to as many as possible throughout the conversation here over the next hour or so. Harrison, nice to see you.
Hey, Chris, good to be here. Thanks for having me.
Yeah, always great to have you on. Harrison, for those who don't know you like myself, give a little bit of background on yourself, your time at StartEngine, your role, and then would love to hear you kind of define what you think of as this hybrid approach to fundraising.
Definitely. I've been at StartEngine in the equity crowdfunding space for a little over 4.5 years now. Currently the director of fundraising, so help run, manage, diligence, sort of the discovery process, deal structuring, and then the overall fundraising life cycle for the Reg CF and Reg A Plus offerings we work with. Prior to StartEngine, I actually came from a more traditional investment banking background. I was on the debt capital markets team at JP Morgan for 2 years, but like I said, 4.5 years in crowdfunding, and has been really exciting to see the industry grow and evolve over that time.
That's awesome. You have definitely become intimately knowledgeable of kind of this, the hybrid approach of having a white label offering page and the StartEngine page. Let's get into defining exactly what that actually is and what that means for founders.
Sure. I think it's helpful to understand the history of how the white label approach sort of came about. I think looking back in 2021, 2022, we saw the emergence of that model with platforms like Dealmaker and platforms like Dalmore, and it provided a lot of value to these issuers. I think as you've seen further growth of crowdfunding in general and more companies utilizing this method of capital raising, access to data, the ability to own your investor funnel, is really becoming a market standard, quite frankly. So we took a look at that trend that's happened the last 3 to 4 years at StartEngine and said, well, we're already, right, a platform company. We already have a large investor community that we've been building now since early 2016. We've raised over $1.4 billion in capital for companies, but we recognize this demand of more issuers, more sophisticated companies that want to own the investor experience and want to own, right, the attribution and the data they get from maybe running advertising as part of a crowdfunding raise. So we went ahead and developed what we like to refer to as this hybrid approach to fundraising, where companies simultaneously can not only be hosted right on the StartEngine platform with exposure to our roughly 500,000 active investors that we're marketing offerings to on a daily basis now, but at the same time provide the backend's white label technology that allows a company to place an investment button on their own website, on their own domain, and then really control the investor journey as they work their way through that investment flow with the ability to interact with and hit the investor with additional touch points to help guide them through that investment process.
Yeah, there's a couple things I want to hit on there. So if you're not coming from the industry and you don't know the inner workings, there are FINRA registered platforms, and I know this sounds boring, so bear with me. And then there are broker dealers. They're two distinct things. Both can host Reg CF offerings, but the rules are a little bit different when you're one versus the other. Can you get into FINRA registered, platform versus broker dealer and what that broker dealer license allows you to do at Start Engine for founders?
Definitely. Looking at Reg CF specifically, I think most of the CF offerings we see nowadays are hosted by, right, FINRA registered funding portals as the intermediaries. A few years ago, we made the decision to begin hosting Reg CF offerings via our broker-dealer entity, which on the sort of setup side means there's a little more diligence required. We're required to have what's called a principal of our broker-dealer review and sign off on all these offerings. But very uniquely, the broker-dealer model gives us the ability, right, to not only enable self-hosting of these Reg CF offerings, so being able to almost host an investment button technology on an issuer's given domain, but in addition to that, when you look at the traditional community-based funding portal platform model, where companies have to hit what are known as objective criteria, a certain fundraising milestone, a certain number of investors, a certain amount raised in the last 24 hours, 72 hours, whatever it is, funding portals are only allowed to market offerings based on those objective criteria. So you have to sort of give equal exposure or equal ability for exposure to all offerings. Through the broker-dealer model, we can actually highlight offerings. So we're not restricted by those objective criteria. And what we've found that's enabled us to do is, for example, if we know that a certain subset of our investors are only interested in food and beverage offerings or only interested in biotechnology offerings, why would we send them deals that are outside of that focus area? Similarly, if we know an offering is resonating really well with either the entire Start Engine investor base or a subsection of the Start Engine investor base, through the broker-dealer model, we now have the ability to give those offerings additional exposure. So we can be a little more flexible and more intentional, I would say, in terms of how we present offerings to different sections and different subsets of our investor base.
And I think that's really important. I want to highlight that because if you haven't done this before, it might not sound like a huge deal. But interestingly enough, when you are on marketplaces like a Start Engine or WeFund or any of them, it's easy to get lost in the sauce. And the reality is most people are not coming to like the homepage of a Start Engine or WeFunder and looking through every deal that's live and active, right? Like a lot of times the way they're hearing about you is through the email sent by Start Engine, so on and so forth. So the reality is the more opportunities and ways that you have to get in newsletters sent by Start Engine and then customize to the right audiences and segments within Start Engine, that's the best way to build your following and actually get people to start paying attention to your offering and to be discovered. And so anything that helps with discoverability, I think is really, really powerful. And essentially what you're saying with your broker dealer license is it gives you more flexibility to provide custom ways of being able to do outreach to parts of your overall investor community, which as a founder, all that means is you have more opportunities to get more eyeballs on your deal. It really does matter. And I could tell you, having gone through and worked with Start Engine on one of our last raises, and we've worked with them prior to, it does matter. It is impactful. And it is a really beneficial thing to do because you're getting more access to their community, which is ultimately what you want, right? But then on the flip side, to your point, you're getting that ability to control more of the data. Now, again, as a founder, if you've never been through this before, you might not know what that looks like. So I can tell you on the Start Engine side, right? On the back end, for folks who came to our white labeled Kingscrowd page, invest.kingscrowd.com, we quite literally, before someone even invested, can see who that person was, where they are in the journey, their email, all sorts of information becomes available to you that you just don't get on the Start Engine side, which is kind of controlled through the Start Engine process. So if you're doing your own, Facebook marketing and LinkedIn marketing and all these things, and you're using your unique URL, you're going to get way more information about those folks who are considering investing in you to then do all sorts of outreach to as well, which is very, very powerful. So I just want to hit on some of those technical things because they actually matter and that actually does have a real impact. And you will see that once you start going through the process. Um, but Harrison, to take a step back, can we get a little bit on, you have been very thoughtful, especially over the past kind of year and a half or two, in thinking about the types of issuers that you think are good for Start Engine and that will lead to ultimate success in terms of raising the types of capital they want. What do you look for in companies and what do you kind of tell founders going into this process? Say, like, if you want to be successful, here's what we look for.
Sure. I think number one is really the type of founder and how willing that founder is, he or she, to be the face of their campaign and the face of their company. I think that's one of the most maybe difficult parts of crowdfunding is it's not like a typical VC fundraising model where you can be a very technical founder. You can walk a sophisticated investor through your projection model behind closed doors and get funded for millions of dollars that day and get a term sheet. With crowdfunding, you really do need a bit more of those forward kind of marketing first founder personalities, I would say, because time and time again, we see a very strong correlation between the founders, their level of engagement with the campaign, their willingness to be the face of the raise, and how successful those offerings are. So, first and foremost, it's diligence on the founder side and making sure not only do these founders have a full understanding of what it takes to be successful through crowdfunding, but in addition to that understanding, the willingness to put in the time, put in the effort, make the calls, hit the phones, and reach out to their friends and family, post on their social channels, reach out to their customer base, and make the crowdfunding raise a piece of not only your personal identity for the duration of it, but also a piece of your company's identity. And that's always going to correlate with a degree of success and a level of dollars raised.
In terms of, are you looking for revenue levels of the company? Are you looking for them to have some sort of budget set aside for marketing or an audience already built in? Are there metrics you're looking at before you'll accept a company?
There are, from an industry perspective, when we look at right direct to consumer industries or food and beverage, right, consumer facing products, platforms, services, we're generally looking for a level of revenue traction, right? A level of you're selling to consumers, you've proven product market fit, and you're looking to galvanize and capitalize on that product market fit and your awareness within the market to raise capital through crowdfunding as an avenue. When we look at more of what I'd call B2B or like technical industries, we've seen some biotech founders, right, pitch here today, clean technology, robotics, more complex, maybe B2B AI, enterprise software companies. That's where we're digging more into, okay, what kind of intellectual property protections do you have? If you're a biotech company, where are you in terms of your stage in getting FDA approval or moving through FDA clinical trials? And when you think about crowdfunding, a big piece of our diligence that we do is what's the marketability or the crowdfundability of this company? I think an incredibly important piece of marketing these offerings is can the differentiation, can what this company is actually doing and looking to accomplish be simply explained in 30 seconds or less to a retail investor, to the general public? If the answer to that question is no, you may have a really hard time getting your message out there at scale and having people understand it to a level where they're excited about investing.
I think that's absolutely right. Another thing that I think we all have learned over the past, 8, 9 years of the industry is that it's not a, if you build it, they will come. There's a lot that you have to invest in this. It's like you're either bringing a network of people into your deal and then leveraging the audience of a Start Engine marketplace, or you're marketing your deal. You're literally spending tens of thousands or hundreds of thousands of dollars on marketing on Facebook and LinkedIn and Google PPC and newsletters and so on and so forth. Or you're doing a combination of both of those and you have a great content strategy, and then you're leveraging the audience that you can bring through Start Engine, so on and so forth. These offerings are complex and they require kind of a full stack sales and marketing strategy, right? I mean, that's the reality of it. Um, you guys provide a lot of tools around this. Talk to us a little bit about some of those pieces that you offer, whether, I know it's things like your newsletter partnerships, the update, portal where you create updates that get sent to followers, all those types of things. I'd love for you to just hit on some of those, and your thoughts on the need to come with some form of outside capital or ways to get it through marketing, so on and so forth.
Sure. As you alluded to, there are a bunch of different levers and critical ingredients that go into the life cycle of a successful offering. And I think it's almost a combination of all those things you mentioned. First and foremost, we want to work with companies, we look for companies that are excited about using crowdfunding for the right reasons, frankly, because they want to give their friends and family, their customers, their followers, their users, their stakeholders, whatever it is, an opportunity to invest above and beyond those opportunity those people may have had through a traditional Reg D, 506B, or 506C offering. So I think bringing an existing community, and it doesn't have to be customers, it could be employees, friends and family. This could be for any type of company, whether it's direct to consumer or business to business. You need to have a willingness and a level of excitement about bringing your own community in on day one, day two, day three. And I think that lays the foundation for an offering where now you can begin maybe reinvesting into paid advertising. StartEngine has newsletter partnerships, as you mentioned, with companies like Robinhood for placements in their Snacks newsletter and various other ones to get into different audiences and get a lot of eyes in front of your campaign. And as I look at an offering chronologically, after that first sort of 2 weeks to 1 month phase of engaging the lowest hanging fruit, your first degree connections, second degree connections, what it turns into in months 2 and months 3 is driving as much traffic as possible to your offering, driving eyes to your page. You mentioned the Start Engine update feature, where as you build all of these people at the top of your funnel, as some platforms like to call it, or followers that we call it within Start Engine, it may take 5, 6, 7, sometimes even more touch points to convert those followers, those people in your funnel into actual investors. And when you have a model where you can own the data from the traffic that you drive, right, with the technology we've built, that I give a lot of these other self-hosted platforms a ton of credit for sort of creating and pioneering in the industry. When you have the ability to really optimize and monetize that data and continue to follow up with your investors, you build a foundation in the middle 1 to 2 months of a raise of people who hopefully will convert by the end of the offering as you get into the third phase, or what I like to call the closing and the urgency period, right? Where you tell all these people you have 2 weeks left to invest, 1 week left to invest. This is your last chance to invest. And what we really love to see is the combination of that follower funnel you've built up through organic marketing efforts, through paid efforts, and through the ability to own an investment flow on your own domain and really understand the data and the attribution of what ads are working, what aren't. That combined with a Start Engine investor base that tends to wait until offerings are closing to come in a really material way is a very powerful combination. And that's how we're seeing these $1 million raises.
Totally. And it's becoming more and more sophisticated. There's the marketing strategy, there's the content strategy, there's the follow-up strategy. There's all these different pieces of the equation. And then by the way, it doesn't end when you finish a raise, right? The end is the beginning of the next raise. It's starting to provide good IR and updates to your investor community so those people actually trust you, see your progress, and then want to reinvest in the next round, so on and so forth. So there's an incredible amount of work that goes into that. And I know that you've always been a great proponent of working with kind of third-party agencies as well, whether it's a Maverick Brands, a digital niche agency, a Potomac Growth, Capital Department. There's all these great groups out there now that are building out these kind of sophisticated systems. But I can't urge enough for you to understand that, like, even yourself, right? If you're just an investor on this call, when you go to these offering pages, are you investing right away or are you hitting that follow button? Because it's so interesting to watch your follow count grow in the middle of a raise. And it's like you see your dollars go up in the first 2 weeks, then it's like leveled out. And then we see this in all the Kingscrowd data. And then in the last 2 weeks, there's this like big spurt. And in the middle, it's really slow. But I think if you watch the follower counts in that period, those would actually grow fairly significantly. And it's people watching you and it's starting to engage with you and come to know who you are. And then the way you're going to close them is with that update strategy. Um, but one of those key things that I think is so interesting about the Start Engine model versus, because you're a broker dealer versus a FINRA platform, is that you can do more of those emails to groups that could be interested in what you're doing. So can you just hit a little bit more on, in a FINRA registered platform, you have to hit certain milestones that have very specific things by which they can send out emails, but the types of things you can do for issuers in that middle of the raise to help them build a following and continue to get in front of the Start Engine audience.
Yeah, definitely. I'll give you maybe a bit of a specific example. There are few things in this industry that are more frustrating then, right, and this was a few years ago prior to moving over to our broker-dealer model, an offering that we think is a great fit for crowdfunding. They have a large community. We think it's a compelling story to tell to the Start Engine investors as well. And for a litany of reasons, some may be in control of the founder, some in control of Start Engine, many out of our control, the company just misses, right, a milestone threshold that a funding portal would require to blast that offering out to their broader investor base, or the offering just raises a little more slowly than you thought it would. So instead of being featured on the Start Engine homepage for a day, it's sort of lost in the mix and lost in the noise that you alluded to when a lot of these platforms they have 50, 100, 150 plus offerings sometimes. So we felt it was really empowering, not only for us, but also for founders when we could remove that risk. We remove the risk of we actually have no control over how your offering is marketed to our investors. It's totally based on these milestones that need to apply equally to everyone. So in a middle right stage of a raise, for example, if an offering is slowing down maybe and you've sort of pulled a lot of the internal organic levers that you can and you're just starting to ramp up on paid advertising, maybe there's an opportunity to get a unique homepage placement on the Start Engine platform to drive some additional eyes or traffic. Maybe there's an opportunity for an email placement to some of our investors or our larger investor group. And I think even more powerful, we now have an immense amount of flexibility when offerings are closing, and we can give right the offerings that we know will be really compelling to our investors instead of them maybe qualifying for one email in the 30-day period prior to their close. We can now send 2 or 3 or 4 email reminders to our investors that this really exciting opportunity is closing soon.
I love that. On the upfront process, you guys also do something that's very unique from many of the other platforms I've worked with before. You are much more hands-on in pretty much developing the Form C and the offering page. Go through what that process looks like and why you've kind of taken this process of really owning the creation of a lot of these materials rather than the founder having to do it.
Sure. It's been a bit of an evolution for us, but I think all the changes we've made and strategy decisions we've made over the last few years are sort of coming together in terms of wanting to be a full service white glove platform where founders that are working with Start Engine, we want to make it clear it takes a lot of work. And right, as you and I have talked about today, there's an immense amount of time and effort and founder commitment that goes into making these offerings successful. But for all the additional administrative compliance, some content creation, marketing content calendar planning, and strategy guidance, we want to help with as much of that as possible. So these founders are not spending 40 hours a week running their crowdfunding campaign. Maybe they're spending 5 to 10 hours a week, but you still have time to run the business that you're growing and do what needs to be done on a day-to-day operational basis. So as you mentioned, we're now providing full support in terms of Form C drafting, review by our compliance team, drafting for both campaign pages listed on Start Engine, as well as the self-hosted issuer branded white label landing pages that are hosted on issuers' own domains. We're handling the development of all of that and obviously can sort of flexibly and modularly fit into whatever existing content and assets that founders have. And while a raise is ongoing, you mentioned there are a lot of really strong marketing partners and agencies out there that are part of this event. And I think all of those each brings their own sort of unique value proposition to the table. Start Engine now, we also have our own internal marketing agency that we feel with the right issuers that for whatever reason may see more value in working with us and keeping everything under the Start Engine umbrella as opposed to an outside agency. We're happy to have that conversation.
No, I think it makes a lot of sense. And that is a very different thing for Start Engine versus some of the other platforms. It's just how much of the hand holding you have in the process. There's also the element of, being a broker dealer. I would certainly say, again, just based on experience, that diligence at Start Engine could be fairly significant more just because of the rules you need to follow as a broker dealer. Could you just give a little bit of context on, like even if you post an update on Start Engine, right? The amount of information you'll have to share and back up with in order to meet the compliance terms of Start Engine as a broker dealer.
Sure. We really look for proof of sources, justification of whatever potential claims or facts are being made and stated on campaign pages as part of marketing materials for campaigns, as part of updates. So there is a slightly more and a greater degree of requirements, I would say, based on the diligence level we have to meet as being a broker dealer hosting these offerings. So on campaign page updates, for example, we have to review those and show that we've given reasonable effort towards verifying numbers that are in those updates or a claim that's made about revenue growth or something about the business. We need to be able to potentially demonstrate to regulators that we've done a decent enough job to verify those claims that are being made.
One of the other things that I actually think is really cool, and would love for more founders to start leaning into and understand the value of, is on the back end, right? If you want, Start Engine could actually become the transfer agent of your entire cap table. Um, so before we get to that, let's define what a transfer agent is so people know what that is. Can you explain a little bit?
Yeah, our internal transfer agent registered with the SEC, and we can essentially be the record keeper or the record holder of whoever owns a piece of your company, whoever has safe notes, convertible notes, common shares, preferred shares. Transfer agents are regulated entities that are record keepers for companies. And we've tried to custom build our own transfer agent specific for crowdfunding companies. So you may go to a Carta and they're great for right your first pre-seed round or a private friends and family reg D that you do. Carta may not be the best fit if you have 10,000 investors on your cap table. And that's really sort of the lens that we've tried to build our transfer agent through is specifically focused on crowdfunding companies that have a lot of investors. We also have cap table consolidation capabilities, so we can put all your investors under one line item on the cap table. And for founders who would rather sort of manage all their investors and have all their transfer agent needs serviced under the same umbrella, we can also host and manage outside investors that may not have come from a crowdfunding raise, but exist within your cap structure prior to coming over to StartEngine.
I will just say that their transfer agent is awesome. And we're in process of moving our entire cap table over to Start Engine. Why do I say that? The price point for crowdfunded issuers is dramatically better than that you'll find on the market. I was with another provider for many years and can tell you it's just extremely expensive. And then the second thing that's really cool about it is you're setting yourself up to provide secondary liquidity potentially. I personally think this is something that's going to become more and more relevant to investors over the next 5 years as secondary markets become more developed and people understand that there are ways to get out of some deals and there aren't ways to get out of others. And those who allow optionality to be able to get liquidity in deals will be more valuable or considered more valuable to investors, and hold a premium and attract more interest, where you'll be able to sell your shares after you buy into them, right, at any given moment in time. Start Engine also has an ATS and the ability, for people to be able to post their shares for sale, right? They're investing in Reg CF and A offerings. Talk to us a little bit about what that looks like and when you have the transfer agent built in, how that creates a seamless process.
I think you gave a really good overview. But with that secondary trading marketplace, we have the ability to list shares that were issued through Reg CF and Reg A plus and potentially give investors liquidity for those securities. It's a bid-ask marketplace. So if there are matching bids and asks and we're able to work through sort of the additional right, legal potential hurdles, if there are maybe transfer restrictions within bylaws or articles of incorporation, we can actually execute that trade on behalf of companies. And if you're also integrated with StartEngine's transfer agent, as that trade is executed, we would automatically update your cap table with that new holder on the back end.
That's really powerful. And I think that removes all of the worry about all of the complexities of having secondaries and not knowing who's joining the cap table, all these things. I just think, again, as a founder thinking long term, having secondary liquidity is going to become a more pivotal, important thing to investors as they realize it's real. I personally want to be a proponent of it. I can't guarantee anything, but I want to be a proponent of it and make that as seamless a process for investors as possible who are looking for that potential liquidity. Now, if you have investors on WeFunder and Republic and Dalmore Group and Dealmaker, you've worked with other groups in the past, can you also move those investors over as well?
We can. Yeah. Any outside investors that either came from another crowdfunding platform or even a Reg D raise, we're able to host those and manage those investors under our transfer agent.
And it's also great, again, having been through all of this is why I'm hitting on it because I know all the pains of going through all of this. Once you go through the Reg A process, if you hit a certain number of investors, you are required to have a transfer agent on hand. So at some point, if you kind of buy into this market as a way to raise capital, you're going to need a transfer agent, whether you want one or not. And just knowing that Start Engine is there and is an option, I think is really great. And obviously, it's seamlessly built into when you do a Start Engine raise where you don't even need to move anything over. But just looking at all the differentiators of Start Engine, I don't know if I know of any others with a transfer agent built in, the ATS built in. There's a lot of really unique things that you guys have built, kind of that full stack of capital raise management, which I think is really, really interesting. And frankly, to your point, can also be used as that cap table solution rather than going spending thousands and thousands of dollars a year on Carta. Um, when you think about, and I know I'm kind of highlighting it all, just going through all of this, but when you think about, you have an issuer at the table. I know you guys compete for issuers all the time. Um, Start Engine versus name your platform. What do you say is kind of your unique differentiator thing that makes you stand out? Why founders come to you guys over others at times?
The hybrid fundraising approach that we've been discussing is a big one. There's not a single other crowdfunding platform out there, to my knowledge, that gives you access to both an existing baked in active investor community as well as the ability to host an offering on your own domain and only investor data, right, that comes from that self-hosted landing page. So I think that's a massive differentiator for us, especially with companies who maybe have crowdfunding experience or are quite sophisticated in the research they've done and their understanding of crowdfunding and knowing what level of both organic and paid marketing might be needed to raise $5 million under Reg CF or raise 30 million plus under Reg A. And I think in addition to that hybrid approach, it's really being a full stack, cover all umbrella, white glove service focused approach to crowdfunding where over the last 18 to 24 months, you guys have seen from your data, we've gone from having 160 live offerings at any given time down to about 50 or 55. And the main driver behind that is we want to ensure we're working with a level of companies where we can deliver the highest level of service and we can truly add value with all these different pieces that exist within the Start Engine ecosystem. So you'll continue to see a much more sort of focused group of offerings that can benefit from our investor community, from our invest flow, from our white label solution, from our ability to market those offerings above and beyond objective criteria that exist, and our ability to manage all those cap tables and investors all in one place.
You've seen enough deals at this point to probably have a good sense of this. And I know this is something I'm asked by founders all the time. In terms of cost to capital, when you think of kind of like a fully baked percentage range, I don't know if you have one that you can share, but it'd be helpful because so many founders ask, like, what is this really going to cost me if I want it to be successful and I need to invest in it? What does that mean? Can you give us any sense of what that looks like?
Yeah, I think bookends, if you're running a really lean campaign, from an overall upfront cost perspective, potential legal costs, and in terms of marketing, you're largely relying on your own existing community and doing very little, if any, on the paid side. You could be looking at a 10, 12, 15% cost of capital. I think more typically, as you scale up to larger raises, you're going to be more in the 18 to 25 or 30% range from a cost of capital perspective. So I think it's really important for founders to understand what they're getting themselves into from a cost of capital perspective, and what it takes to be successful. It's a timely question because really recently I came across a way of looking at the cost of capital that I thought was really interesting. And it's called almost the efficiency metric, where not ignoring D2C companies for a second, where there's a lot of ancillary, difficult to quantify value of maybe spending 20% of your raise on advertising, but those dollars spent not only bring in investors, but they also bring in right new customers and potentially grow brand awareness and drive revenue. But even looking at right B2B companies, biotech or medical devices or health tech, when you think about generally being able to get a slightly friendlier valuation, or a slightly friendlier valuation cap, stay in control, maybe not give away preferred shares with a 3x liquidation preference, friendlier terms that you're able to get through crowdfunding versus with a lot of VCs nowadays, they're going to keep driving you down on valuation and asking for another inch and asking for more at the negotiation table. When you think about the efficiency of the dollars you raise per percentage point of dilution, crowdfunding is actually quite efficient when you look at it in that sense and compared to, well, maybe I could go raise $1 million from a VC, but I'm giving up an additional 10% of my company. So I also like thinking about it in terms of efficiency and how the equity you're giving away is translating into real capital raise that needs to be reinvested into your business.
Yeah, I can't stress that enough. And you said two things, but it's like I don't think founders value it nearly enough. Control of your business. When you give up a board seat, that is someone who now has a controlling interest in your business and wants to see things done for their benefit, right? At the end of the day, a fund wants to make sure there's an outcome for their fund. And so it becomes about their needs and desires versus your needs and desires. And I always say we're on the same page. If they're on the same page, they wouldn't need the control. They would just say, you vote for me. I don't need a vote. There's a reason they need a vote. It's because they want to be in control. That matters a lot. Do you want to control your business or do you want someone else telling you how things are going to go? I think that counts for so much more than any founder is willing to realize, especially the first time around. I think we see more second, third, and fourth time founders raising an equity crowdfunding than in the venture space because they realize that taking those big flashy names sometimes is the absolute worst thing you can do for your business and especially your own return. And the second thing you mentioned was a liquidity preference. And again, I don't think people realize just how detrimental this can be to your business. Liquidity preference, again, for any founders around this call who don't understand what that is, it is quite literally saying, say you raise $5 million today from a venture capitalist at a $25 million valuation, right? So they own whatever percent of your business, around 15, 20%. And then what they'll say on a one times liquidity preference is if things don't go super well and we end up selling this business off for $5 million, we get the first 5 million. So you'll see nothing. If you get 10, we still take the first 5, and then whatever's left over can go to everyone else. If there's a 2 or 3 times liquidity preference, it can mean if we put in 5, we have to get 15 before you see a dime. So you could end up having this like great exit on pay. Oh, we sold for $15 million in cash, and none of us got a dime because it all went to the venture capitalists who only put up other people's money when you put in all your blood, sweat, and tears and your own money into a business. That is outrageously expensive capital. And I'm a founder who is committed to using crowdfunding as a main mechanism by which we've grown our business. And I'm telling you, that is something that is always in the back of my mind. I'm actually happy to give a better valuation than a venture capitalist would offer. I just want no liquidity preferences and no, board seats where you're going to control the outcome when we see an outcome for the long term. So just I can't stress that enough as a founder how valuable that is. And a cost of capital of 15 or 20% really is not the worst thing in the long term if you can keep the control and fate of your business in your own hands and prevent all of those liquidity preferences that can destroy your return long term. Um, and then to your point, Harrison, all the ancillary benefits and things that go beyond that, right? Like one, there's your cost of capital, but then they become a customer and you got all that marketing and branding. I mean, there's so many things on top of it that I don't think people realize. It's a very powerful marketing campaign as well. Um, and then there's the IR part of it, which is if you continue to nurture these investors long term, you could benefit dramatically. So I've acquired investors maybe for a 15 or 20% cost of capital who, invested 1,000 or 5,000 or $10,000. Some of these folks have gone on to invest hundreds of thousands of dollars in Kingscrowd, likely bringing down my, cost of acquisition dramatically in terms of acquiring those investors. So anyway, that's a long diatribe about the value of recognizing, a dollar amount cost of capital versus what you're giving up when you're giving up board seats and preferences in terms of liquidity. So I think that really matters. And hopefully you really heard that. Um, Harrison, in terms of, so thank you for kind of explaining what all that looks like. Let's talk timelines a little bit because that's the other big question I get asked. Folks go, okay, like we need capital yesterday. Well, probably not a great fit for you. Talk about kind of timelines to get up and running with the campaign and then actually run the campaign. What are you seeing, is optimal for success?
General setup timeline on average is about 2 months. If you're really prioritizing this focused and are pretty clean from a legal doc and financial reporting perspective, you could launch a crowdfunding raise in maybe 5 or 6 weeks if you work really quickly. We generally see raises are running for an average CF raise, I would say, is running for anywhere from 3 to 5 or 3 to 6 months. Regardless of whether that's on the shorter end or the longer end of the timeline, using that same sort of three-phase marketing raise strategy, the initial outreach going to first degree connections, friends and family, existing customers and community. The middle phase is all about funnel building and driving as many eyes as possible. And then you have the closing urgency period at the end.
Can you talk about the role of rolling closes and disbursements during the raise? If we're saying 10, 15% of capital is going to go towards investing in marketing, well, that could be over 100, 150, even $200,000 if you're raising $1 or $2 million. So, you might not have all of that up front. How can you use a rolling close or disbursement to kind of help with that?
Yeah, it's a great question. We allow for rolling closes, as you said, which means under Reg CF, after launching your offering, the regulation requires that your raise is live for 21 days, right? Before you can request a disbursement and access capital. Whenever you request a close on capital, you have to give investors 5 days notice. And then there's some processing time with escrow. So typically 30 days after going live, whatever you've raised and has cleared in those first 30 days, founders raising on StartEngine can close on. And based on that disbursement and these ongoing rolling closes, you earmark maybe 10, 15, 20% of each of those closes to reinvest back into paid advertising. So the vast majority of marketing spend during the offerings that we host is actually done out of those rolling closes as opposed to being cashed directly out of pocket at the start of the raise.
No, I think that's really helpful. Couple questions from the crowd. What kind of recommendations would you make to a company still in the seed or pre-seed stage who wants to use CF for raising capital?
I would say first off, speak to the platforms, right? Understand which ones might be the right fit for you, which ones won't, and understand everything it's going to take to have a successful offering. Going back to given you're at a pre-seed or seed stage, what does your traction look like? What does your story look like? Do you feel you have either a community around the company or a personal network around yourself that you'd be excited about giving the opportunity to invest to? And I think contextualize that with the question of how much do you want to raise? If you're only looking to raise 300, 400, $500,000, you may be able to do that through CF purely from your own organic outreach, and you can have a relatively low cost of capital versus if you're looking to raise 2, 3, 4, or $5 million, you're likely looking at a much more robust marketing effort behind a raise that will constitute with it additional costs and marketing spend that you have to take into account.
Yeah, and to your point, first off, just set your expectation of what's reasonable to think you can raise, right? You're not going to raise 2 or 3 million. Could you raise 2 or 300,000 and hit some milestones? Probably. I can tell you my own experience. I started this business 8 years ago when I was 25 years old. I had no network and no money. I had nothing. And I basically spent 6 months walking around, quite literally walking around Boston, making phone calls, meeting angel groups, meeting individual investors, and then networking with them and getting them to make introductions. And I cobbled together 200,000 over about the first 9 months of running Kingscrowd to get things off the ground, all just by word of mouth and meeting people for coffees. And that's all I did for literally 6 to 9 months. I just grinded out coffee meeting after coffee meeting after coffee meeting, and just meeting people and getting people to introduce me to people. So and by the way, I would have never been able to do it without Reg CF because most of those people were writing $1,000 and $2,000 checks. They weren't writing 25 or 50, and most of them weren't even accredited. So like it counted for a lot, but it was not a marketing campaign. It was a word of mouth, me just grinding on the street, finding people. So you can do it. You just have to set your expectations right, and be thoughtful about the process you take, and then use that as your stepping stone to the next, entry point, so on and so forth. Another question here that I think is really good. There are fixed costs in putting together a campaign that I think may be a bigger barrier to entry to CF than final costs of capital, legal, etc. come to mind. Thoughts on a don't try unless you have at least blank.
Yeah, I think there are two ways to answer that question. One is from a runway perspective, right? I think to the listener's question, you'll probably have maybe it's $3,000 to $6,000 of CPA review costs to raise anything above $124,000 under Reg CF. I would say most companies, the majority, have some level of corporate legal work that's required to prepare for a crowdfunding raise. Maybe it's amending your operating agreement to authorize more membership units to be sold, or your articles of incorporation or bylaws to create a new share class, for example, if you're a C Corp. So you're probably looking between CPA and legal costs on the low end. $5,000 could be upwards of 10, 15, or $20,000 just of those admin costs to get a raise going. And if incurring those costs put you in a position where you only have a couple months of runway left, CF might not be the right path for you at that stage. You may be better off doing a Reg D just right on your own, where people are manually wiring you money and you're manually recording them on a cap table that you hold internally until you get the company to a position where you can incur some more costs up front while still maintaining comfortable runway to be able to run a larger campaign through crowdfunding.
Yeah, I think that's a great point. And you can do this real cheaply if you need to, right? Like you said, 5 to 7,500. Shout out to our raisepapers.com service. You want to go check it out. That makes it as affordable as you can. But you're not going to get away without 5 to 7,500. Like there is some expense that has to be invested. And by the way, I don't think that's dramatically different than doing a Reg D. You're probably going to
Yeah.
spend at least 2,500 to 5 on a Reg D. You remove some of the accounting stuff, a couple pieces of the paperwork. But at the end of the day, you need a few grand, right? Whether it's on a credit card, whatever. But also to your point, if you're like running out of money there's one thing to be starting out. I have nothing, and hey, I'm willing to work the next 3 to 6 months to get us where we need to go. There's another to be like, hey, I need to make payroll in 2 weeks. This isn't going to work for you. That's definitely
Mhm.
not the answer. Um, so yeah, I would say timeline, expect from the I want to do this to first dollar in your bank account from the raise is definitely 3 months, and probably to get what you're hoping for or in the range of it after a lot of hard work is 6 months for the day
Yeah.
you say, hey, I definitely want to do this. As a founder, if I raise on Start Engine, are they allowed to go into the investor marketplace to pitch my deal like a broker does?
Not necessarily. We're not facilitating what I'd call direct pitch events, right, between companies that we're raising for and our investors. We are a marketplace in the model, a marketplace model in the sense of companies that are raising on Start Engine, they're discoverable by our investors. As companies hit certain milestones, we can advertise those companies. And then we also have this unique broker-dealer capability within the crowdfunding ecosystem to give additional exposure points to those companies raising with us. But I would say that's maybe different than what this person is asking in the traditional broker sense outside of crowdfunding.
I'm curious to ask you, in terms of all the issuers you work with, what percent end up being repeat issuers on the Start Engine platform and doing multiple rounds of funding?
It's around 50%, I want to say, if not slightly higher. Almost the majority of our offerings are repeat issuers.
That's something else I just want to reiterate. Do not think of this as a one-time hit. If you're really thoughtful about this, this can become a really main piece of your long-term funding strategy. And even if it doesn't end up being a main piece, it could be a really important piece of your overall funding strategy. Do not think of these people as someone that you don't have to make any effort with, that you don't ever have to tell how things are going with. That's like the silliest thing you can do. One, it's not fair or respectful to these investors who are putting their dollars to work in your business. And by the way, aren't asking for controller preferences, right? So give them the updates. And two, there's so much more value behind the dollars of these people, what they're writing for you on that first go around than they potentially have. You never know who is in that Start Engine system. I've had people, man, that have gone from few $100 and then long term have ended up building a relationship with, who have deployed hundreds and hundreds of thousands of dollars in Kingscrowd. So do not be fooled that they're amazing investors in the crowdfunding community, that if you invest in them in the right way, they'll continue to invest in you. So don't lose sight of that, and definitely take a long-term strategy and approach to the space and how you raise money in the space.
Hmm.
As we're kind of wrapping up here with the last couple of minutes, Harrison, um, for founders, we're thinking about CF. First off, what do you want them to know? And two, if they are interested in working with Start Engine, where should they go? What should they do?
Sure. If you're interested in CF, do your research. Speak to the platform, speak to StartEngine, speak to the other ones out there, and figure out which one is the best for you. I think there's no platform that is the best solution for every company out there. Frankly, there are probably the right fits for some companies and other platforms that aren't the right fit for certain companies. Have those conversations, do your diligence. Don't make a decision until you've really spoken with someone that represents different players within the industry so you can fully understand the value that each of those platforms provides. And I think once you sort of gain that knowledge, look internally and ask yourself, is crowdfunding the right path for me to go down? And am I willing to put in this effort? Is this worth my time for the capital I'm going to raise? I think a lot of times the answer is yes, where in the venture environment we've seen the last 4 to 5 years, it's increasingly binary. It's increasingly difficult to raise capital unless you have AI and you're building a foundational large language model. And I think what's really amazing about crowdfunding is you really do see a correlation between the amount of effort a founder is willing to put in, the amount of calls they're willing to make, emails they're willing to send out, social posts they're willing to draft and push out, and the capital that they'll raise. So I think you do see that counter at the top of your campaign page going up and up as you put more time into an offering, which is a really nice just sort of correlation to see for founders, given where we've seen the overall raise environment recently.
And then following up on the last point, if they are interested in working with you all, where should they go and what should they do?
Yeah, if you're interested in StartEngine, you can apply via our raise capital form. Go to startengine.com and you'll find right the place to apply. We're happy to speak with any company that's interested in working with us, tell you more about our model, and see if there's a fit.
Awesome. And something that I've always respected about you, Harrison, is, we get issuers all the time asking, hey, can you make an intro to StartEngine? They're interested. And we'll make those intros where it makes sense. But even then, you will always be very honest with the founder and say, hey, I don't think this is going to work for you. And I think that's a great thing. So, he's not going to send you down the path if he doesn't think it'll be a viable path, certainly on StartEngine. So I really respect that. Everyone, thank you so much for joining us today. This has been a fantastic conversation. Harrison, thank you so much for your time. As he mentioned, feel free to go to StartEngine and to apply and see if it might be a fit. And please do send us, if you have any questions or follow up, let us know. And I'll be happy to try and get as many of those over to Harrison as possible. Thank you, everyone, again for attending and for the wonderful and thoughtful questions. And we hope you all have a wonderful day and look forward to seeing you on future sessions at Investment Crowdfunding Week. Have a wonderful day. Take care now.